GM, welcome to another investing episode where I take you through the daily analysis. My name is Professor Adam, so let's just get straight into it without any further ado. First things first, we have the TPIs. We have an LTPI and an MTPI here. The LTPI is in a slightly negative rate of change because of the decline in our TradingView liquidity proxy, which happens to have a very high correlation to Bitcoin. So, as you can see, it's going sideways a little bit, and that has caused the liquidity proxy to kind of whip around a little bit. If you're trying to detect these long sweeps in the time series, then you're going to need to use some quite high time frame trend indicators for this. And as a result, when you enter sideways periods like so, which is a bit annoying and a bit unusual, you're going to be faced with whips, especially if it's going sideways for a long time. So who knows? We could be in a phase similar to this where it's going up and down before going into a uptrend. I highly doubt that we're in a phase like this where it's going up and down and it's about to go into a downtrend. I think that's incredibly unlikely. But let's just continue on with the analysis and not focus on hypotheticals. So first things first, I will have a look at this new letter from Capital Wars. Now, did January really matter? This is quite an unfortunate letter because, as you will see, if we just skip over all the words and go straight to the chart, because a picture says a million words, you can see here that the projections for US Federal Reserve net liquidity is actually far more negative than it was in previous updates. We have what appears to be almost a flat line leading out into the end of February, followed by a sharp decline and a recovery. Now, this sounds more representative of the air gap that Michael Howell was talking about that may not manifest until the second half of 2024. But here it appears as though it's going to manifest itself in the first half of 2024. This also looks like daily data to me. Maybe weekly data. Very hard to tell. The resolution on this chart is a bit low. But anyway, what this is kind of showing is that there is going to be some fucking issues. Now, the funniest thing about this is that there's not going to be too many issues in the short term because if the Fed liquidity stays stable over this period, China is going to take up much of the slack there, and they're going to be printing, and the Fed's going to be relatively stable, and the combination of those two will be up and to the right. But the front loading of that stimulus that China needs and the temporary sustaining of positive liquidity from the US Fed before whatever this decline is, and whatever liquidity that will be getting taken off the table by China after they've already front loaded that stimulus, maybe after they have stabilized their real estate market and Evergrande, so on and so forth. Wouldn't that align with the hypothesis that I've been talking about over the last couple of weeks, that the halving is going to be a sell the news event? January, February, March, April. It's almost mid-year by the time you get to the halving. And I've said to you previously, because the halving is effectively a meme at this point, because its net issuance supply being cut in half is so small and marginal and inconsequential that it's basically just a pop culture reference at this point. It's not actually a significant fundamental driver of price. You want to know what's significant fundamental driver of Bitcoin price? Liquidity. So it's like fucking Michael Saylor when he's talking about crypto assets. He's like, there's no second best. Yeah, there's a crypto asset and it's called Bitcoin. Well, guess what? There's a Bitcoin driver and it's called liquidity. There is no second best Bitcoin driver. There is no halving. There is no fucking ETFs. There's only liquidity. All right? There's no second best driver. So if we're in a state where we do have China front loading liquidity and they're trying to save themselves from Evergrande, I've also had some new information come to my attention as well regarding United States banks and their their issues with some of the paper losses that they're holding on their books, not only from bonds but also from commercial real estate, that they may be looking to stabilize their system. Like we don't want a GFC 2.0, and if you see this information and it's very clear, black swans only happen once. Right? You're never going to have a black swan that happens twice. And now I know that it may seem too good to be true, but I'm telling you, there is no such thing, in my personal opinion. I may eat my words here, and I'm not really a futurist, but I do not believe in GFC 2.0. I do not believe in a second type of black swan similar to a first one, because by definition, you don't see them coming. But if you can see something coming that's similar to something that's happened in the past and it's been addressed previously, I don't think you guys understand that every banker and every person that's working in finance these days, every person that's got their degree in the last fucking 15, 20 years studied almost nothing but the GFC at university. When I went to university, it was only a couple of years ago now, that's basically every finance subject included something about the GFC and understanding how the GFC happened and the reserve requirements designed to protect the banking system, to prevent things like that from happening a second time. So if we have issues, collateral value issues within banks, they are going to be looking at these things. They're not going to allow GFC 2.0 to happen. If necessary, they will find a way of fixing it before it happens. That's my belief. This is totally speculation and a very much my opinion based on nothing but my opinion. But with such a circumstance, if you are looking at the market and you're seeing such a risk, especially in an election year, they're not going to allow that to happen, and they will print. And even if they lose the election, then they will pass it on to Donald Trump. If they win the election, they'll blame it on the immigrants. They'll find a way of making an excuse, or they'll blame it on Russia or they will make a reason up. And the plebs will believe it. It wouldn't surprise me if most of the people, well, a lot of the people watching this fucking investing analysis would believe it too, because I know that not a lot of you show up every day, and a lot of you are tourists. But the point that I'm getting at is that I would reasonably expect, the combination of Chinese liquidity and the Fed looking maybe to protect themselves leading up to whatever fucking financial collapse there is into the halving before second half of the year, where whatever this fucking air gap is going to resolve itself, that you will have a sell the news event for the halving, and you'll probably come and round trip all the way back down to current price before going back up again. That's what I believe the coherence is now between this and what we're seeing on the charts and the halving event. Because the pop culture meme will be the halving. I could talk about this shit all day. Anyway, so I went through a review of this letter. Now, this is going to sound insane for me to say, but I actually couldn't really find anything in here that sufficiently explains where this comes from, because I know a lot of you will be looking at this going, "Oh, Adam, it was going up so strongly before, and now it's changed." Yes, I know. Don't come to me and be like, "Oh, Adam, fucking why is this happening?" Because I've genuinely read through this thing and I don't understand. I know that's ridiculous. I might need to spend more time with this. I read through it twice and I didn't understand, so I'm not going to bother reading it to you because I probably won't be able to explain it sufficiently. But yeah, this is kind of the direction that they're expecting the Fed balance sheet to go. Now, keep in mind that we've moved from a balance sheet projection that looks like this to one that looks like now this. Now, is it possible that at some point it could look like this? I don't know. If a revision can change by such a massive amount, especially if we have SVB 2.0. Because remember, they don't want these, if there is a bank that's going to have some issues, they don't want this shit to become systemic. Again, this loops back into my GFC 2.0 hypothesis. They will address that, and that will look like that. That's just my opinion. So anyway, I'm not going to harp on that too much, despite the fact that I do love these capital war letters, because I think it would be irresponsible for me to try and fully explain to you something that I don't understand. So I will continue to read through this and see if I can find something. And another point that confounds my fucking judgment and adds to my confusion is this letter here from 42 Macro, where they basically state the inverse. And they say, we expect the Treasury to offset balance sheet roll-off via its low net bond supply financing regime to avoid causing market disruptions in a general election year, which makes sense. The unnecessary $500 billion in the reverse repo program and above target TGA balance represents coiled springs of US liquidity that may add to the positive global liquidity impulse. So I'm fucked if I know how to resolve those. Perhaps that's what this is. Perhaps that's this. And that's what he's talking about. Maybe it's a short-term effect and not a super long-term effect. Hard to know what time horizon he's talking about there. Or to represent that on this chart. Perhaps that's the, whoops. Perhaps that's the state that he's talking about, where there's like, it supports global liquidity for a period of time, because there's no time horizon represented here. But generally, his fundamental analysis is quite long. So that it just serves to confuse me more. So I'm not going to make a massive change in my expectations. Like I mentioned previously, if global liquidity is kind of generally in a macro upcycle or a long-term upcycle, and we do have some supportive Fed actions and we have majorly supportive Chinese actions, then the median or the average between those two is still going to be net positive, up at a 45-degree angle, by a reasonably significant amount for, say, the next 1 to 2 months at least. So at least in the short term, I don't think that there's anything to worry about. As this cliff comes a little bit closer, and remember, these reports from Capital Wars are weekly, so there will be time to judge as the cliff or the drop off comes closer, and we can see, maybe get a little more insight into what's happening. So for the moment, things are still bullish and things are still fine, but the path that we take through 2024 now is a little bit less clear and a bit more confusing to me. And I do commit to fully understanding that with everything that I can possibly, with all the energy that I can deploy. Now, I've read through the rest of the 42 Macro lead-off morning note. There has been no change to anything that is relevant to us. None of the weather models changed. None of the liquidity models have changed. Positioning in stocks is quite risky at the moment, and dispersion is currently coming down. So that is a little bit risky. So for the moment, that would actually represent a risk-off kind of environment. But as far as the discretionary investment idea summary goes, we are still in a triple fucking hat trick for Bitcoin, which is long on basically everything. So yes, in the short term at least, no concerns from me. Now let's move on to some of the metrics. So full cycle valuation as it was, as you would imagine. Now let's move on to some of the shorter term stuff. Should really resort this dashboard around so it's a little more, so it makes a bit more sense. Good to see that gap closing rapidly as the moving average for short-term holder realized price continues to collapse effectively, which is great to see. And we're seeing a bit of a roll-off here actually of realized price. I'll keep an eye on that. Composite index not looking too crazy. The volatility signal didn't resolve itself. Nothing interesting to see there. Inter-exchange flow pulse, how is that coming along? It's cruising along in a kind of a neutral state at the moment. It's going sideways, which is great because this here moving average will hopefully continue to come down like so, and then we will have a resumption of that uptrend at whatever point over here in the future. Still, that is maybe like a week or two away. You could expect some more consolidation. Like I've said, I'm still expecting some more consolidation, and I'm bullish overall, but a little bit of patience will pay dividends here. You may, and this line probably needs to be adjusted a little bit like that to compensate for the curve in the realized price, short-term realized price. So you may see some more consolidation like so before China turns on the printing press. That's okay. Sometimes you need time-based consolidation to give you that strong base for the next leg up. Not that the next leg up is going to be that strong, but I'm not really sure how high it's going to go depending on liquidity. But then I wouldn't surprise me at all to see this come down almost completely down to the bottom line, because remember the bottom line of the Barham model is going to be tilted up like so. So to see that come full circle and basically go into the bottom, whatever that is, the 2.5 to 3 standard deviation fucking zone of the Barham model, back to like coming back around to current price to kind of fulfill the destiny of that, nuke everybody, and then continue up for the remainder of the bull market. That would be fantastic because it would flush out a lot of the weak hands that held through here and late buyers and give you that great springboard and that high quality holder base to move up into the bull market from. Now, as far as additional full cycle valuation metrics, nothing really interesting there to look at. Nothing of concern. GBTC flows. I really wish this fucking thing would zoom correctly. So stupid. Whatever. I don't care anymore. Cool. Yep, and our ETFs from the overall market still continue to accumulate Bitcoin at a rapid pace, which I love to see. New money, neutral. Short-term MVRV, very close to midline, but still got a little way to go. So I could reasonably expect that to go down a little bit further, which is fine because that would fulfill the consolidation idea that I had. And nothing really major to talk about there. Okay. Good to see altcoins coming down. Is this what I think it is? The next leg up in altcoins? If I can be very speculative. And bread hasn't really moved much. No major changes in any of those. Google Trends is the same. Sentiment there is the same. Bitcoin is turbo up on a very small increase in price, if not basically no increase, which I don't like to see. Bitcoin has basically gone nowhere and sentiment is flying up, which would lead me to believe that it's more likely to go down than up. I mean, if I saw that, I mean, fuck the traders. Fuck the traders and fuck Ethereum by the looks of it. I know this is what's going to happen. Everybody's going to be looking at this, longing the living shit out of it, which is the reason why bear flags flags often play out, is because people will be like, oh yeah, it's going up. They think that this is happening. So you know where they put all their stop losses? Right here. Acts as a giant magnet towards price, drawing it downwards, which fulfills the flag's destiny. Now, how low it goes? Maybe something like so. Bitcoin. Wouldn't surprise me to see that like so, and Ethereum as the reverse. But yeah, somewhere lower would make sense to me, because that's too much. What was the last time it was this high? October 19th. So the last time it was that high, it was actually before a pump. Whoops, Ethereum. Huh. Last time it was that high, it was actually the bottom. Maybe this sentiment measure doesn't work the way that I think it does. Okay, so we have a sample size of 1. Whatever. Sol declining. Sol sentiment declining on positive price action. Very bizarre. Nothing new or interesting there. Oof, okay. A little bit more upwards for Ethereum. Solana's looking quite neutral, maybe even downwards. Nothing major there. Bitcoin. A little bit of up. A little bit of up. Okay. A little bit of up. Fuck. Okay. Quite surprising. Okay, and the Capriol sentiment is the heater continuing to move in the direction that I anticipated, and bread is coming down. Cool. So, yes, overall, what are my thoughts? So, still bullish. Still bullish over, say, this time horizon here. Over this time horizon here, still bullish. Beyond there, not really sure. However, I do have the bias that somewhere around the halving, that there's going to be a peak somewhere and we will decline. And that will align itself with the air gap in Fed liquidity. Because there is no second best driver. It's all just liquidity. So between these two dates right here, current day to this day over here, bullish. At how that resolves itself, who the fuck knows? Over a shorter term time horizon, I think that upwards would be a blessing, but I think that a little bit of consolidation may still be on the table to get us back to that realized price line. But yeah, generally up overall. And it's kind of cool to see a little bit of strength in the ETH-BTC ratio. Whether that continues, who the fuck knows? And Solana is looking lovely. Although I'm a little bit cautious relative to its previous performance. Well, relative to its previous behavior. Every time it's had a massive pump like this, it's had a couple of months of consolidation before getting more legs. So we may see a period where it rotates back to Ethereum for a little bit while Ethereum has its run. Because I still do strongly believe in the Ethereum thesis. Like the fact that within my network, like there are at least a couple of the richest guys I know, and this is hilarious, I just realized this today, that independently, basically all of them have massive Ethereum positions with basically no Bitcoin. Actually, I'm the one that has the most Bitcoin out of several of my wealthiest friends. Most of them just have Ethereum, and that's not because I spoke to them. That's independent decisions that they came to. So that makes me feel quite good about myself and about my portfolio exposures. It's just a case of waiting, and I know a lot of you are very impatient, and that is what it is. Like I guess I'm going to have to forgive you for being just like every other regular person, if that's the type of mindset that you have, where you're like, oh, you're seeing Ethereum kind of like stall out and everything else is going up, and you're like, oh, will it really happen? Maybe it won't happen. Oh God, just relax, just fucking chill out. If it's too hard for you to handle, just hold Bitcoin. Do whatever you want. You don't have to follow what I do. I believe what I'm doing is best for me. So, yeah. Anyway, I've got a couple of tweets here that I thought was interesting. This one from Cross Border Capital. Growth isn't a Fed mandate. So that's fucking very unusual. It's a very unusual statement to make because I'm quite sure that it is. But he may be coming from a different angle. So I'm going to see if I can figure out what he means by that. Yeah, very, very weird. Oh, yeah, and ball with hat, apparently. Thought that is hilarious. Unreal. And yeah, that's all I've got for you today. Not going to go into any of the question channels or anything like that. So, yeah. Thank you very much for showing up, guys, as every day. I always appreciate you. Make sure you show up every single day for your daily investing analysis because you never know when things might change. Like I did today with the global liquidity, like the fucking US liquidity metrics. You never know when things might change and you need to adjust your headings and your expectations are suddenly fucking not the way that you thought they were. So thank you for your time and I will talk to you tomorrow. See you later.